STRATA Skin Sciences, Inc., NASDAQ, SSKN, Due Diligence Report. Date, September 2025. Executive Summary Business, medical technology company developing and marketing devices for dermatologic conditions. Products include the X-Track Seamer Laser and VTR-AC lamp systems for psoriasis, vitiligo, and related conditions. Operates through two segments: dermatology recurring procedures and dermatology procedures equipment. Recent results: Q2 2025, revenue of $7.66 million, down approximately 9% year-over-year. Net loss widened in H1 2025 due to lower recurring procedure revenue and operating pressures. Management emphasized progress on reimbursement and coding to expand patient coverage. Market cap liquidity. Nano-micro-cap company with market capitalization in the single-digit millions. Shares are volatile and thinly traded. One company overview and business model headquarters: Horsham, Pennsylvania. Products: XTRAC excimer laser and VTRAC lamp systems. Model: hybrid equipment plus recurring procedure model. Revenue comes from device sales and recurring payments tied to patient treatments performed with installed devices. To industry and market: position market, dermatology devices and procedures for psoriasis, vitiligo, and related conditions. Position: niche player with an installed base of X-Track systems. Competes with other light laser devices and pharmaceutical treatments. Success depends heavily on reimbursement. 3 revenue streams: recurring procedures, ongoing revenue from clinics performing treatments, equipment sales, XTRAC and VTRAC devices, training, and capital equipment revenue. Geography: US and international distribution through direct sales and partners. For competitive advantages: established installed base with recurring revenue potential, recognized product brand in excimer laser therapy, clinical data and familiarity among dermatologists. 5 scalability growth levers include new device placements, higher utilization rates, and expanded reimbursement coverage. Constraints include long sales cycles, payer decisions, and reliance on a narrow set of conditions. 6 financial statement analysis: Q2 2025 revenue $7.66 million, down approximately 9% YOY. H1 2025 revenue $14.5 million, with net loss expanding compared to the prior year. Margins: gross margins fluctuate with the mix of equipment versus recurring revenue. Q1 showed improvement. Q2 declined. Balance sheet: limited cash resources relative to larger peers. Financing risk is material if growth slows. 7 key valuation metrics: market cap, single-digit millions, nano-micro cap. Not meaningful loss-making. An EV revenue appear low due to small market cap, but not reliable valuation metrics. EBITDA, negative EBITDA, so not useful. 8 growth potential and TAM. Growth depends on expanding the number of treated patients, increasing device utilization, and achieving payer wins for reimbursement. Company has indicated that CPT code expansion could potentially triple the covered patient population. 9 competitor landscape: competes with other dermatology laser light therapy devices, also competes with biologic and systemic drugs for psoriasis and vitiligo. 10 management and governance: small leadership team with medtech experience. Governance quality and insider alignment are key given the company's size and cash constraints. 11 risks: reimbursement risk, the most significant risk. Lack of payer coverage limits growth. Demand risk: low utilization reduces ROI for clinics. Financing risk: limited cash runway may lead to dilution. Competition, drugs, and other devices can limit adoption. Litigation risk: legal outcomes can be material. 12 dividends and shareholder returns: no dividends. The company reinvests in growth and operations. 13 insider and institutional activity, limited institutional ownership. Insider trades and small fund activity can materially affect liquidity. 14 technical analysis signals: shares are volatile and illiquid. Price movements are sensitive to earnings, reimbursement news, and litigation updates. 15 recent analyst coverage and news highlights: Q2 2025. reported $7.66 million revenue and widening losses. Management emphasized reimbursement progress, CPT coding efforts, and device placement updates. Investment thesis. Bull case. Expanded reimbursement and higher utilization could drive recurring revenue growth, with asymmetric upside given the company's small size. Bear case. Weak utilization, lack of payer wins, or financing needs could dilute shareholders and stall growth. Monitoring checklist quarterly revenue trends, especially recurring revenue, reimbursement, CPT code updates, device placement cadence, cash balance and financing activity, litigation or regulatory developments.